everyone, a very good evening to everyone. So, today we are going to learn about something in BFM. So, this is the class where we learn some topics and also we are going to learn about what is BFM and what you will get in this course basically. So, let's start with the class. So before starting, let me introduce myself. As you can see that my name is Aishwarya and my educational background is, you can see here, I am a subject matter expert in BFM, risk management and many more subjects. Teaching experience more than 5 years, and yes, 50,000 students are already mentored by me, more than 50,000. So this is a short intro about me. Now, before moving to the modules, I am just want to tell you what you will going to get in this, right, in this course. I think that is more important. I hope that my screen is completely visible to you. Okay, so this is CAIIB all-in-one crash plus cracker for November December exam for 2025 in the English medium. And what you will get in this course basically, here are 200 plus sessions which are very concise, and you will get focused classes which cover all the topics of CAIIB examination, that is ABM, BFM, ABFM, BRBL. Then crash classes are recorded here, so obviously all the topics covered, all the prior level of topics are covered in BFM. You will get short notes here and quick revision, right? Cracker classes are live. We will solve MCQs, numericals, case studies and all the things which are important for our examination. So yes, you will get here lots of questions related to the case studies, numericals and all of obviously on the MCQs, right? Then here test plus AI analysis, that means you will get here 40 full length mocks, right, with detailed solution and also analysis of your solutions will be there. Why this batch? Because 20,000 successful bankers here already cleared their examination and they cleared their JIIB and CAIIB examination guidance from the mentors who have 14 years plus of experience. And yes, you will get here community like this is the community tab where you can tag, like if you want to tag me, so you have to click this at like this, and here all the teachers name, all the mentors names are there, so you can tag particular that person and you can ask your query, right? So this is the community feature, so you will get the all the things. Whenever you face issue, you will get and you can ask, you can discuss even with your colleagues, with your mentors, right? So in this 100 recorded session for revision of all the important topics in the crash course, 100 live sessions for MCQs, numericals, case studies, just to be exam ready, right? And yes, you can anytime, anywhere access it with 24/7 availability of recorded session, on the go learning. Complete syllabus coverage is there for CAIIB paper for the upcoming examination. You can also download the class notes here, right? And yes, non-banking hours is there because I know that so classes will be early morning or late night after 7 p.m, right? Offline video download, you can also download the videos in offline mode and you can watch anytime whenever you feel comfortable and whenever you are learning the things. And unlimited doubt support raise queries are there, so obviously if you face any problem, that problems will be addressed quickly. Learning medium is complete in English, content in English, explanations also in English. These are the faculties, Anshul ma'am, me, Ajay sir, and Saloni ma'am. So these are the things you are getting in this particular course, right? So now let's move to the module, like how to tackle each module, because you know that according to the IIBF every module is important, right? Every module is important. There are 4 modules in the BFM, and everyone is saying there is a common myth that BFM is a complex subject and BFM is a full of numericals, case studies, and all these things. But according to me, if you have the concept knowledge, you can clear this exam. Basic thing is concept, right? And with the help of MCQs, I suppose I supposed to think that thing. I supposed to think that there are 2 advantages of solving the MCQ. First, practice, right? You get the idea that which type of questions will be there, and also it will build a atmosphere, like uh, whatever we feel in the exams, right? Exam centers. Second, concept clarity. Concepts clear with the help of explanation, right? So we have 4 modules. Module A that completely depend on international banking, and some numericals are there, and yes, full of case studies, where we learn how to do banking at international level, what are the facilities are there. We will learn everything about a detailed syllabus. Then module B is all about risk management. Lots of risk are there in the banking, basically lots of risk are there, so we have to manage these risks, and how to cover these risks, what are the strategies, what is the structure, everything in this chapter, in this module, particular module, right? Then we have here module C, that is treasury management, and module D is all about here balance sheet management, right? Where we learn how to manage assets and liabilities, what are the components of assets and liabilities, and lots of things are there. And yes, numerical concepts are also there in this particular module. Now this is international banking, in which you get exchange rates and forex business. Exchange rates and forex business. What is the definition of foreign exchange? A very conceptual chapter plus numericals also there. Then what are the factors that determines the exchange rates? What is the meaning of exchange rate mechanism? There are dealing room, which I think are the main and crucial, in which these include 3 types of rooms: front office, back office, and mid office, right? All the derivatives product, like swap, option, interest swap, like types of options, future, forward, and then RBI and FEDAI guidelines. Then what are the arithmetic concepts? Global code of foreign exchange. Liberalized remittance scheme, as we know that there is limit of 2,50,000 US dollar, 2,50,000 we can remit the money, but in some cases with the approval of the RBI, this limit can be extended in the case of medical, or in the case of immigration, in the case of education purpose. So we can also provide the proof to the RBI that we can also extend this limit. In this, there are 2 types of transactions: capital account transaction, current account transaction, and one important thing, that is TCS. And yes, this chapter is completely full of case studies. Case studies are there. Then correspondent banking. Correspondent banking, we know that what is correspondent banking. Suppose there is a bank A in the India and having the customers in the Germany, right? But without having the branch in the Germany, how bank A deals with the customer of Germany? So for this, bank A will make a contact, will make contract with the Bank of the Germany, that you will provide the services of to my customers on my behalf. That is the concept of correspondent banking. In this we will learn about different types of account like Nostro, Vostro, Loro, Mirror. And apart from this, there are lots of ways, country based, region based settlement and payment system, but one of the most popular among banks is Swift, right? Then different types of NRI account. Then what are the facilities are available to the NRI account? DC, documentary letter of credit, which is a type of agreement. This agreement is generally made between two banks of seller and buyer, importer and exporter, just to make sure that everything is going smoothly at the international level. So in this, lots of rules are there, and yes, lots of case studies also there in this chapter, right? Then what are the facilities that are available to the exporters and importers? There are lots of facilities available to the exporters and as well as to the importers, and lots of regulators are there who support the importer and exporter. They created different portals for them. For export, there is a portal, exchange and export data processing and monitoring system, and for importers there is a portal which is import data processing and monitoring system. So authorized dealers have to report everything on these portals, so RBI will get everything in detail about all the things, right? Who are authorized dealers? Who have the license to deal in the foreign exchange. This license are issued by generally RBI, right? Then external commercial borrowing is a type of loan, a very important chapter, and how to do foreign investments in the India. What are the facilities available to those investors, right? Then yes, lots of definitions of the risk we are going to learn in this particular chapter. Then very important concept, that is ECGC. As you know that A module is full of concepts, and all concepts are important. All 10 chapters are important in this module. Then yes, role of Exim Bank, RBI, exchange controls in India, FEMA, FEDI and others we are going to learn in this chapter. What is FEMA? What is FEDI? That is a self-regulatory organization established in 1958. What is the functions? What are the guidelines they issued to the banks? How banks will work on these guidelines? All these things in this chapter. Then IFSC Gift City, which is in Gujarat. What is the role of the IFSC city? Why banks are attracted to this IFSC, and what is the work, what are the regulatory framework? All these things we are going to learn in this chapter. Then there is technologies. As you know that in the current era everything is becoming modern, and bank, if we compare with the traditional banks, traditional banking methods, we know that international banking technology is growing day by day. Even in the normal banking, you can say domestic banking, technology is increasing day by day. So what are the technology, how these technology evolve, what is blockchain? All these things we are going to learn in this particular classes. And also a very short quick notes are there, which I think are very helpful for you to revise, because the language is easy, which cover all the aspects of every chapter. Then we have module B, risk management. As we know that there are lots of risk, and every risk is very crucial for the bank, because even a single mistake can wipe out the entire profits, right? So in risk management, first we are going to learn about the trinities. In the first chapter of this module, there are trinities of the bank, which we have to learn. What are the relationship between these trinities? Then second chapter, in which we get the idea of the banking book, trading book, off balance sheet, on balance sheet. What are the banking definitions we are going to learn in this chapter? Then we have risk regulations in banking industry, the most important chapter. And lots of things are there from this, because this is the particular chapter which also includes numericals. you will get the idea of haircut from this chapter, and all the basal norms, which I think very important. All the basal norms, what are the types of capital which are required for the banks to manage any type of risk, right? So these things we are going to learn in this chapter, this particular chapter, very interesting and good chapter, and a long chapter of module B. Then we have here next chapter, that is market risk. As we know that what is market risk, when there are the changes in the market and these changes affect the banks, that effect is called market risk. So what is the structure, who are able to manage these, how to manage all these things, we are going to learn in this particular module. Credit risk, when the borrower is not able to pay to the banks, that is called credit risk for the bank. Then operational risk is one of the most dangerous and one of the most simple risk to understand, because this is the risk which generally caused by people, process and external events, right? People, process, like software area problem, server issue, electricity issue, fraud, theft, steal of information or mistake. Liquidity risk management, bank, when the banks does not have enough money to fulfill the obligation, that is liquidity risk management. Then LCR and NSFR, two most important ratios in which we are going to learn about HQLAs. What are the HQLA, why bank needs to manage these HQLAs, and how to monitor these liquidity risk, what are the tools, what are the methods are there to manage these tools. Then third module, module C, treasury management. You will see a lot of questions from this chapter also, because this chapter is also we can say a important chapter, right? So in this we are going to learn about first concept, organization, and what is the profit, like how bank earns profit and the process of globalization. Then what are the different types of treasury products we are going to learn in this chapter. Then what are the GDR, what are IDR, what is external commercial borrowings, then reserve assets, CRR, SLR, LAF, treasury risk management, in which the VAR, value at risk, which is basically is a model that is used to consider to like predict extreme loss situation, right? Then we have derivative products, all the derivative products we are going to learn in a like in a deep manner in this chapter. Then what is asset liability management, how to manage asset and liability, why banks need asset liability management. Balance sheet management, very first chapter explains every component of the bank balance sheet. Then what is the meaning of asset liability management, why to manage asset liability, what are the purpose and objective of this asset liability management. Then scope, every pillar, because in the first pillar we know that banks have to maintain a minimum capital requirement, that is um, guided by the RBI. Then supervisory review process, in any condition if banks are going in a wrong direction, so regulators intervene and direct them the correct way. Market discipline is all about the transparency, like transparency as well as disclosures. Why? Because we know that banks have to maintain the transparency, so investors, stakeholders, shareholder, customer, depositors, everybody know the correct positions of the bank, right? So next we are having this is the, I think, last chapter in the module D, Then asset classification and some provisioning norms like 70%, how to calculate PCR, all these things we are going to learn. Liquidity management, interest rate, and RAROC. These three things are important. Now, how to crack this exam? Like, first thing is the most important thing, we have to understand about the syllabus. That is, I think, one of the most important thing. That is, briefly understand what is the syllabus. Then prioritize the module. Module A, highest priority. Then module B, have the priority but lower than A. Most important A and B, but C and D are not that much important, but we can't skip C and D. These are easy in comparison to A and B. But A and B modules are also easy. They are actually full of concepts, numericals, as well as case studies. Then practice with the PYQs as much as you can do. Analysis you can watch. You can go through with the questions that provide PYQs, right? And there are lots of PYQs available. Even the analysis are also available. Mock test, 40 mock test you are getting, and each I think contains 100 questions, so lots of questions are there. You can easily crack this exam, right? And yes, most important thing, create a practical timetable, because I know that managing professional and personal life is quite difficult, but with the professional life we have to enjoy our personal life too, right? And yes, if you can dream it, obviously you can achieve it. Already you are a banker, already you cleared a milestone JIIB, so BFM in CAIIB is not a big deal. You can do it also. Have faith, you can do it. So I told you about module A and B are important in comparison to module C and D, but we can't skip these module too. So now let's see a quick overview of the concepts here. So first thing I am going to tell you about the dealing room, like foreign exchange dealing room. This is a place basically where banks are handling all the foreign exchange transactions via nostro account, via engaging trading, via handling all the foreign currency assets and accounts. That it is like a profit center for the bank, generally a dedicated area for the banks. Because of this, banks as well as all other financial institutions generate a lot of profits. And in this there are three types of dealing room. These dealing rooms are regulated with the guidelines, according to the guidelines of the RBI, FEDI, and all the bank policies. And who needs in the dealing room? Those people who can do work in the situation of pressure, who can handle all the stress, who are responsible, who are skilled, who have knowledge, who are able to admit mistake, who can work aggressively. And yes, trust is the key here. Communication and trust both are required. But you know that if even a single small mistake can create a huge mess, and also creates lots of loss for the bank. So then we can say yes, TCS is one of the most important topic. So let's learn about TCS also. What is TCS? Tax collected at source, right? Tax collected at source. And generally, if I am telling you about the TCS, up to 7 lakh, no TCS is required. But 5% is required after exceeding 7 lakh limit. 5% TCS is deducted. 10% in the case of when no PAN card is there and no Aadhaar card is there, right? 0.5% on the education loans. Only 0.5% after exceeding this 7 lakh limit, right? So Yes, FATF is also important thing, Financial Action Task Force, that sets special rules for the cross border correspondent banking. Basically this task force helps in preventing the money from the money laundering or terror money or black money, and also banks ensures that high transactions are protected against any type of cyber crime, financial crime, because obviously if all the things are happening online, so there are high risk of cyber attacks, and lots of types of cyber attacks are there, right? And what are the functions of correspondent bank? Correspondent bank is one of the best service, because I think it is very costly for every bank to open the branch in every country. This is a type of impossible thing, right? So correspondent banking, in the correspondent banking, banks will provide account services. They also handles like income, outgoing or coming income, all these things they can also handle. Nostro account is the account like a country that is holding a bank in the another country, that is called nostro account. Vostro, when another country is holding account with us, that is called vostro. Loro, loro means third party is there, their account with them is called loro account. This is very quickly I am telling, because just I want to tell you the things in a quick way here so you can understand in a better way. Then we have definition of NRI. Yes, now see the main thing, that are MCQs. So first is there, which of the following statement best explain RTGS transactions must be carefully monitored by banks throughout the day? Which of the following statement, you have to read each statement, so you can tell that why these RTGS transactions must be carefully monitored by banks. So I think here the correct answer is option C, because obviously RTGS transactions are processed individually, which require banks to ensure there must be sufficient funds, right? There must be sufficient funds available in the RBI pool account at all the times. That's why monitoring is very important. What is the key function of ISBP 745 in the international trade? ISBP 745. What is the meaning of ISBP 745? This is a publication from the ICC that basically provide detailed practical guidance for the examination of the documents that are presented under letter of credit, which is governed by uniform customs and practice for documentary credits like UCP 600, right? It clarifies basically how the banks have to interpret the UCP 600 rules, which helps in reduce mistakes, which helps in ensuring the consistency is there, document checking is there, which include bank, exporters as well as importers, right? So here, according to the concept, which option is correct here? It offers practical guidelines for document examination under the LC. Now, which of the following statement correctly differentiate the role of FEMA 1999 from that of FERA 1973 in the context of India's foreign exchange regulation evaluation? As you know that FERA is replaced by FEMA, right? And FERA is one of the most stricter regulation compared to FEMA, because FEMA provides flexibility. So here we can say that FEMA 1990 introduced a civil law approach. that replaced the criminal provision of FERA 1973, because in the FERA, violation means no bail, like punishment is not bailable act, high penalty, and also that person is considered as criminal. So the correct answer is here option B. How does the structural distinction between EDPMS and IDPMS reflect the system priorities of the Indian foreign trade regulatory framework, that is especially in monitoring settlement and compliance timelines? IDPMS or EDPMS, both are the portal that are used for the importers and the exporters, right? So option C is correct here. EDPMS focuses on the tracking of the export proceeds, but IDPMS only focus on import remittance reconciliation. So the correct answer is option C. Now, in the context of blockchain enabled international trade, which of the following conditions are the most critically eliminates the necessity for traditional correspondent banks? Blockchain technology. Can you tell me what is the meaning of blockchain technology? See, blockchain technology is generally, we can say that, a very simple type of technology that is used in banking, that offers the bank to reduce the transaction cost, improves the security, and also there is a complete compliance process, right? And enable the things that are useful for the banks in exploring the new opportunities. So the correct answer is there, option B. There is the automated execution of the contract condition via smart contract or distributed ledgers. What is the primary reason for regulating banks and financial institutions? Why banks need regulation? Obviously, everyone in this world needs regulation. In school, we learn regulation. In colleges, we learn execution. In life, we have to follow the regulation. So, banks and financial institutions are the backbone of the economy. They generally do a lot of things for the economy. They have a great role in generating the opportunities. So, it protect depositors, because all the thing is all about the depositors, right? They have a lot of trust on the banks, so these depositors ensures the financial system stability. The main thing of the regulation is just to protect the depositors. So the correct answer is option D. So why is the board of director critically important in the bank liquidity risk governance framework? Just a sec. Yes. Why is the board of director critically important in a bank liquidity risk governance framework? Board of directors, these are the top level top level in the management. They are completely responsible for everything. They have to make the policy, they have to set the limits, they have to implement the policy, they have to guide other departments. They determine the bank liquidity risk tolerance, like how much a bank can tolerate the things, and they have to form the strategies as well. So these are the most important level for any bank, right? And yes, LCR and NSFR, why these are important in Basel third? Because LCR handles short term survival during stress, generally 30 days, and NCFR, it promotes long term funding stability. So both are important and most important ratios, LCR and NSFR. Then what is the primary objective of the NSFR? What is the primary objective of the NSFR, this ratio? NSFR is basically ensures the stability, and one of the most important ratio that ensures that banks maintain a stable funding profile in relation to their long term assets and also off balance sheet exposure. It requires banks to have enough available stable funding to cover their required stable funding over a year horizon, over a 1 year horizon, right? So we can say that the correct answer is there, that is promote long term funding stability to match asset liability profiles. So option C is correct here. As per the RBI implementation timeline, what was the liquidity coverage ratio requirement restored to 100% after a pandemic induced relaxation? That is the date, which is April 1, 2021. This is the date after 100% is there. Before this, there is some fluctuations in maintaining this ratio, right? So 100% restored in April 1st of 2021. So these are the things here in this, basically how we are going to learn numericals and MCQs of different subjects, different concepts, different modules. This is just a short overview. So I hope that it is clear, and lots of moderate questions are there, easy questions are there, and apart from these, very hard questions are there with hard language also, because I think everything we need to manage while we are learning the things. So that is it from my side. I hope that it helps. So thank you so much. Let's meet in our next class. Till then, take care everyone and have a good day all. Thank you.